For this, I would request Mr. Krishna Tadepalli, Director Sales, Avalara. So, talking about Mr. Krishna Tadepalli, he is a seasoned business professional with 15 plus years, leads India sales at Avalara, specializing in tax technology solutions. His diverse background spans startups, digital transformation, and advocacy for compliance automation in global tax regimes.
Good morning, everyone. I hope I'm audible. So after such a vibrant session by our colleague, and I think I'll ensure and I'll keep up the pace. So when the technology is the word which is reverberating and resounding in this Augustus forum, so I'll still be on the technology rails, but I'll slowly slide in a bit into taxation world. And I know that's one of the famous or the area of interest for many of the people in this room. So before I begin, I just want to ask the ladies and gentlemen in this room, how many of you feel today that Indian taxation system is still complicated and complex? Great. Well, I should have asked this question before 2017. Then I could have seen the entire audience. Anyways, so by and large, the person whom every one of us really appreciate is Albert Einstein. Because this gentleman has a lot of IQ. He brought in a lot of theory of relativity and other things. But even Einstein was shook away by income tax. And I'm really happy for this for one simple fact, that Einstein was never introduced to indirect tax. So then the statement would have been, he would have said, income tax is damn simple, man. It's a fairly straightforward percentage. Indirect tax has got many whims and fancies attached to it. So if I ask any politician about indirect tax, he would say, this is a good tax because I can levy at any point of time. So no questions given and no answers given, right? So let's do a short world tour. Ladies and gentlemen, there is no visa, there is no ticket. I promise you for that. So we'll start with our favorite destination on the planet, US. We look everything towards US, right? So US has various kinds of taxation, and I'm strictly focusing only on indirect taxation, ladies and gentlemen. We have sales and use tax, we have communications tax, we have beverage and alcohol, you have excise, you have lodging. So now slowly you will start feeling the truth that Indian taxation is fairly simple. And I promise you that that's going to be my goal by the end of the session today. So what makes US complicated? So they have around 15,000 jurisdictions. And every jurisdiction, every county, every state has got their own rules. Imagine we are selling a software. In India, we charge 18% as a flat GST. And if we are trying to use it more from an R&D perspective, we claim for an R&D cess. But the same software you sell it in US, it can be taxed in 468 ways. California says, I don't really tax. It's 0. The same software in Texas is 80% taxable. You go to Colorado, there is no state tax, county tax, but you have a city tax. So it's chaotic. And I'll also give you the reason. So today we are in Holiday Inn, right across the road. Here, if you purchase, let us say, an orange juice, you can have a tax of around, let us say, $3.50. And right across the road, it could be $4.12. It is more based on lat and long, which is the latitude and the longitude. It's not just mere zip code where we are under the impression, or it is our non-cognizance that the taxation is going to be fairly simple on that. In 22 alone, these are facts we have amassed with our experience in dealing with global indirect taxation for the past 2 decades. In 22 alone, US experienced about 260,000 rate and taxability updates in US and Canada together. And around 122,000 updates on a sales and tax holiday. So you sell a stationery during the time when the universities are getting opened up, they are exempted by 5%. And you sell it right after the day the university is opened, it's gone, and then you are back to your normal rate. And you sell gasoline in the time of when in December. So in certain states like Alaska and etc., they are completely waived off. So these are the changes which are happening in the US. So now we'll take a sharp turn towards Europe. VAT simplification, VAT is fairly straightforward, 18%, 20%, 19%, depending upon the country you operate in. But there is a big wave of e-invoicing and live reporting picking up in Europe and few other Asian countries. And they are very clear about post-Brexit, the data geo-positioning and the geo-locks are becoming effective. Like one of the learned friend mentioned in the very initial session, yes, data privacy, and the government keeps on changing. They bring a new policy, and they say now you cannot really ship any product into the EU, even with if the de minimis is even one kind of euro as such. So earlier it was around 22 euros was the de minimis. It was brought down to €0 because of the recent regulation of IOSS, import one-stop shop for B2C shipments. You have non-union OS regulations coming up. And even, are you storing your products or goods within EU and shipping in the EU? Then your compliance completely changes. So these are the trends we have picked up from a e-invoicing and a live reporting perspective. I must still say, and I'm extremely happy whenever I speak in various forums like this, I'm very happy to say that India did an e-invoicing launch in a much more structured and in a fast manner when compared with any other country on this planet. Poland, which is supposed to be the first country which coined the word of e-invoicing through PayPal and Simpal, and still they are contemplating to go with e-invoicing in 2024. That was, we drew inspiration from Poland, for that matter. France, which is technologically advanced, and the adoption of technology is fairly high as a country, so they have just deferred their e-invoicing plans to 24 mid because of the non-readiness of the businesses and their systems. And this trend will still continue when we go to a little bit of an Asian part of it, like Japan is coming up with 23. They were supposed to start in 1st of October 2023, their e-invoicing. They've just pushed it again to 24. And Malaysia, small countries like Indonesia, now they have figured out e-invoicing as the source to fill their tax gap. And the reason is every of your transaction is getting accounted. And there is equally a benefit for organizations because in countries where VAT and GST as a regime is already implemented, you have a concept of credit. But you don't really have that concept in US. There is no concept of credit in US at all. So whatever you do, your purchase, you are supposed to get your use tax calculated, and again, you need to remit it to the governments. So now, the icing on the cake for e-invoicing. Can you imagine? US is trying their hand with e-invoicing now. So one, we have such a complicated scenario of around 122,000 tax changes. Now imagine if e-invoicing gets into the play. So that adds fuel to the fire. So if I have to succinctly put it across, it is chaos as usual in US, simplification and e-invoicing, and e-invoicing is going to be more of a buzzword which is happening across the globe. So how many of you in this room are currently retail brands who are trying to do a lot of cross-border shipments? Okay, great, sir, thank you. So when we really take this discussion to the next level of cross-border, I'll spend a couple of minutes on this. Cross-border has its own kind of complexities because, number one, the growth rate is exceptionally high for companies who are using cross-border, like with the rise of e-commerce systems, with the rise of online shopping, and thanks to COVID, because that really gave in a lot of push and a thrust on digitization of the business across the globe. And the market is estimated to be around $7.9 trillion as per research data. So if you really look into it, we are just shipping products across the borders, but what is the kind of compliance associated with it? There are duties involved in it. Prior to that, you also have the HS codes which are to be calculated. So I'll give you a sneak peek and the kind of complexity you will have when your sales really pick up from a cross-border perspective. With the rise in the retail e-commerce, we are expecting the business to go as good as like $7 trillion, like I've mentioned, and almost 1 in 2 kind of people are trying to do a lot of shopping online. Even the trend have picked up so well that there are companies, right from manufacturing to retail to even businesses are trying to do a lot of shopping online. That's where we see the new age technologies, like they've mentioned a moment ago about AWS. We are trying to push a lot of data onto the cloud. So the on-prem trend is slowly fading away. because of the robustness, cost, and other things involved. So the new edition of HS added more to the complexity. And this is what I want to bring your attention to. This is a kind of a sandal. We all know. In India, whenever we do it, the HS code, by definition, the first 6 digits are going to be common across the globe. That's the HS code classification which we do in. But if you really look into it, in Australia, it is a 10-digit HS code. In United States, it is a 10-digit HS code, which is different. And in Japan, it is a 9-digit HS code. But now you see the variance in the kind of duty tariffs. 9 out of 10 companies today, where I personally interact with, or the business who are doing cross-border, they would say like a 6-digit HS code would cut it. Does it? It doesn't. Because imagine, instead of 5%, if you are levying 12.5%, you are charging a wrong tax to your customers. And they won't really like it. What if you are charging, instead of 5%, instead of 12.5%, you just charge 5%? Then it is a negative cash flow for you. So in Europe, the same music case bag is classified into different things if you look into it. All the European Union has got only one classification, by the way, all 27 countries. But you can still see one classification calls it a travel bag, another one is a music case, another one is others. And here is a kind of a structure from a duty tariff perspective. Imagine if you have multiple number of SKUs which you are trying to export in. Is it easy for us to really manually classify all of this? I just want to leave that question in this Augustus forum today. So with the kind of physical presence creating a taxable a need for you to get registered in that particular state, transaction volumes, transaction values, and marketplace, you are selling through a marketplace, the rules are completely different. And even if you are doing a remote marketing, that would also trigger your nexus in US, and you need to get a registration in that particular states. Remote employees working from the kind of geographies, and even business visits. All of these are adding to the pain. I'll also give you a short survey, which we did with a lot of exporters. So 50% would say, I trust God and I go with it. Seriously. I mean, this is a fact. And then some would say, like, then the shocker starts kicking in. Is it true, God? And then we tell them, like, no, this is the case. This is what happens. These are the rulings, and etc. After hearing the entire thing, oh my God, because now the high starts. And this is where the real Bharatiyata will step in, okay? And I'm calling it Bharatiyata for one reason. Because, we have this habit since ages. It's like, kuch ho sakta hai kya? Kuch to kar sakta hai, like, let's sit across. But unfortunately, gentlemen, in global taxation, with the kind of the gaps the governments are facing, they are forming more and more stringent rules for us to comply. And the last 10% is help me God, and then, we go ahead and you do a kind of, backdated compliance and etc. In addition to the complexities, which is beyond your control, governments are something which you cannot really influence, I understand. But on the other hand, you have operational pitfalls. When things are changing every moment, and real-time compliance has become the need of the hour. And companies are moving their digital journey, they are upscaling. Like I've mentioned, about 60 countries are ready to do their e-invoicing and live reporting. And virtual audits, e-reporting, and electronic tax file sharing. So earlier, it was only a scenario where you need to file. This is the classic case till 2019 in majority of the European Union countries, where you need to file all of your bunch of your documents in a hard copy with the tax office. And the processing took a lot of time. And I'm sure, like, many of you in this forum would have experienced that. Saying, our return filing is still pending in France. It is still pending in Hungary. But now, post-COVID, every nation have really changed the way they are trying to get their tax filing done. And the first one is the Making Tax Digital by UK, where they have made it a point, like every business who are operating in UK, it is mandatory for them to do a digital filing, as they cannot operate in UK. As of November 30th, we still see close to around 500 plus kind of companies who are yet to get their MTD registration. So it is a way where if you don't really comply, so you are out of the business. And this is the landscape of e-invoicing and live reporting happening in next few years. This is a timeline given in the very recent conversation where the e-invoicing summit happened a couple of days back, and this is the latest one which we are looking at. And see the kind of the transformation you are looking at. Mandatory B2B crossing by 2020, 2030 is what the companies are really looking into. So you have crunch with people. So there is a Forbes research, which I was going through a while ago. Around 49% of the CFOs, they say we have talent shortage. And 41% of the CFOs, they say one of our finest full-time executives are spending around 10 to 12 hours a week on mundane tasks, like preparing a report or probably collating a data or trying to do a kind of pivot and etc. So as the custodian or, let me put it like this, I'll not really call it as a gatekeeper from a finance perspective, but I am a firm believer of the aspect that CFOs are the one who would really decide the direction of the strategy. So the job is not to really look at checks and balances. The job of a CFO is to really look into where should I really put my business in? What is the next part I should really go in? How would you really do it if we don't really understand what is the lay of the land, what is the law of the land, and what are the kind of implications you are going to incur if you don't really act right, and what are the kind of aftermath effects? The penalties are very severe. US have now they just stepped up their entire penalties up to 50%. A state like New York have really bumped it up from 30% to 50% in the last few months. So imagine, even non-compliance is way, way costlier than your cost of compliance. So my humble submission to the ladies and gentlemen in this room is, please consider your compliance as an utmost priority. I understand there is impact, we want to go in, there is a revenue and etc. But the non-compliance can really impact on multiple fronts. It can hit your valuation, it can hit your reputation, it can hit your growth plans. And we have seen what happened very recently with one of the best edtech companies, right? So the cases are live. And with all of that, I still have around 3 minutes. So with the kind of recent technological transformation we're having, whether it is robotic process automation or tax technology solutions like ours, or even solutions where you can seamlessly integrate with your source systems, or changing your own existing ERP systems and etc., it is important that any CFO of any organization, whether it is a startup or whether it is a mid-company or even an enterprise, it is important to shake your hand with technology and live with technology. Nonetheless, we all are doing it in our personal lives. How many of you today will send a message, a SMS? I know, for a fact, 9 out of 10 people will pick up their WhatsApp and they just do an SMS, right? We are not really trained on WhatsApp till a few years ago. So it's as simple as that. So technology, I don't say technology is eating away our jobs, but look at it as an enabler which can help you do your job much more efficiently and effectively in less time without your personal burnout. I just want to leave the entire audience with that statement and a sneak peek on what we do at Avalara. So we are a global tax technology company for the past 2 decades. And we serve clients across the globe. So we serve close to around 30,000 plus customers in close to 100 countries. And we determine the tax. We help them with registrations. We also help them with the past compliance studies. And we also have our tax research products where people can understand, figure out what is a new country where they're stepping into, what is the kind of an impact, and what are the kind of areas the businesses need to comply in, etc. So just to give a glimpse, so we're present in 16 offices with around 5,000 plus employees across. And these are the numbers we just did. These are numbers from 22. We did about 40 billion tax determinations in 1 year. And in the recent Cyber Week, we have just breached our own kind of numbers of the records which we are given. So now our transaction, we deliver the transaction, the tax determination happens in less than 40 milliseconds. So be it any kind of a geography you are operating in, so we do have solutions which can help you do that. So with that note, ladies and gentlemen, thanks a lot for this opportunity and for patiently listening to what we have at Avalara. And if you have more questions, so I'm around, and we also have our team of experts who are there here. So please feel free to reach out to us. We'll be more than happy to take up any questions. Thank you.
enlightening us with your thoughts. And with that, I would request Mr. Shivraman Iyer, Global CFO, GEBS Healthcare Solution, to please felicitate Mr. Krishna Tadepalli.